Well, it looked like the best news for the housing market in 3 years. Home sales up. The Case-Shiller Price Index rose in May for the first time since July 2006. But does this 0.5% rise signal a housing recovery, or are we being deceived by some bogus numbers? Joining us now to sort it all out is founder of the Babb Group, Dani Babb. She is in Irvine, California. Condo Vulture LLC's Peter Zalewski. He is in Miami. And the Wall Street Journal Digital Network senior correspondent Stacy DeLoe, who joins us from San Francisco. We got an all-star cast tonight. Dani, first to you, because you're the one who sent me a very provocative email yesterday saying these Case-Shiller numbers are bogus. Why do you think they're bogus?
Well, first of all, David, they surveyed 20 metro areas. It's not a sample of what's going on in the nation. So that's problem number one. Problem number two is at the end of June, they've actually created an exchange-traded fund, which inherently makes their numbers, in my opinion, a little bit biased. They actually make money as people speculate that the market is getting better. That's a big red flag to me. I don't think we should be using this index anymore. And third of all, the way that they sample, how they select particular homeowners to actually create their sample of 20 is not statistically valid, unfortunately, in my opinion.
And if I could throw in something else from your email, Dani, you say that sales, according to them, means contracts. It doesn't mean a closing. Right. In order to fulfill your contract, you have to close, and that means a deal with the bank and everything. It's very hard to make deals with the banks these days.
Yeah, that's an extremely important point, because the Commerce Department came out and said, there are about 32,000 more homes that sold than expected, and that seems like a great number. The problem is exactly what you said. This is the number of homes that went into contract during the spring buying season, which is still 21% down from last year spring buying season. And it's very important to note that as we have more foreclosures, the value of appraisals are going to come in lower, and as that happens, a lot of these homes that went into contract will not be able to close because the appraisal value will come in too low.
All right, Peter, is Dani right? Are the Case-Shiller numbers all bunk?
David, I got to tell you, I'm used to being the pessimist. Here, I think I'm going to be the optimist. Ultimately, what we're seeing here, think about this number. 2005, at the peak of the market, at least in South Florida, and we went into the toilet sooner than most. 2005, we had about 61,000 closings. Last year, we had 35,000 closings. This year, we're on pace for 45,000 closings in South Florida. Now, we might be a laboratory as to where things are kind of good. They go bad first, and then they tend to recover first. So I got to think Case-Shiller is right. If anything, they might be a little bit too conservative based on what we're seeing in the street right now.
So, Stacy, is Peter the canary in the coal mine? Are his figures of what's happening in Miami indicative of what Case-Shiller was talking about?
Well, certainly I'm not going to call Case-Shiller data bunk. I mean, typically they're actually regarded as being the best indicator of what's happening in the real estate market. Now, I will say that I'd like to see more data. This index lags by 2 months, and what we did see in the 2-month period that they covered, particularly here in San Francisco, where we did see that price uptick, we had people who locked in that 4 3/4 mortgage rate. Maybe those were about to expire. We also had, on top of the $8,000 federal incentive, a $10,000 California incentive, which has now expired. So, I'm going to be looking for these last 2 months that Case-Shiller didn't check.
Yeah, well, although I got to say, Dani, I might agree that some of these numbers are bunk, particularly because of what you mentioned, also because of the fact that what you say 22% of folks right now with mortgages are upside down, where the mortgages, cost more than what the house is worth. Now, that's happened, and frankly, I don't think that's a bad thing, because there have been times in my life where I've owned a house that the mortgage cost more than what the house was. But things change over time. But it's the people. So many people bought these houses without putting any money down, and these are the potential walkaways, and that could really change the numbers around, right, Dani?
Yeah, you're absolutely right. There's 1.3 million homes that, because of the moratorium earlier this year, have not yet gone into foreclosure, but they're in the process of the state of default. Those are going to hit the market. And then, just like you say, about 22% of people today are upside down in their mortgage. What we know from studies that have just recently come out is that 1 in 4 people, when they owe 15% more than their home is worth, 1 in 4 default intentionally, and 1 in 4 default unintentionally. So that's about half of that potential market of the 22% that are upside down in the nation. That is a huge number that could hit the market.
And, of course, most of the walkaways are people who put no money down, so they don't have any skin in the game, so to speak. But, Peter, you love it when people walk away, because that gives you and other vultures a chance to snap these things up.
Listen, David, there's nothing better. Let me give you an idea of what's really going on the ground here in Miami. We've had 4 bulk deals that have closed in the last month. These are transactions where several dozen units are trading for multi-million-dollar price tags. Somehow, some way, the private equity groups seem to think we're at the bottom. Whether or not the rest of the country thinks so, I'm not sure. But 4 deals have closed in the last month.
And I got to tell you, Peter, I have friends who are taking all their cash down to Florida, buying up as much real estate. If you have cash, you're king down in Florida right now, correct?
Absolutely. You're a rock star.
and Stacey, the fact...
And Florida rocks.
Yeah, I understand. But Stacey, the fact is that there's a lot of cash still on the sidelines. A lot of people who aren't putting their money in the stock market, $2 trillion, according to some people's estimate. Maybe some of that cash will be put into the stock market, into real estate right now.
I think these numbers show a good thing in terms of activity, right? What we've been looking for is people coming off of the sidelines, and I do think that this is an indication. Of course, the consumer is really sensitive right now, and as we saw in some of the beige book data that came out today, they're still hesitant to make big-ticket purchase items. You know, it's just a matter of time. We'll see.
All right, Dani, I'm going to give the last word to you because you're the one willing to use the word bunk, and we love people who have strong opinions here. What are you looking for specifically as a turnaround in the market, the real estate market?
I'm looking for 3 to 6 months of price stability in most, not just metro markets, but suburban markets, particularly where urban sprawl occurred, people moved to, that were semi-close to jobs, but not in urban areas. And we also have to keep in mind that a lot of the low-tax states, like where Peter's at in Florida and also in Nevada, are going to benefit from New York and California increasing their income tax rates. Those are going to be interesting areas to watch in the next couple of years.
Peter, you may have a lot of people flying out of New York right down to Florida in order to take advantage of a no-tax state. Peter Zalewski, Dani Babb, Stacey Delo, good to see you all. Thank you very much for coming in.